is Sarah, a tutor at Accountancy Learning, and in this video I'll take you through the Tax Processes for Business Finance Act 23, AAT Sample Paper 2, Task 6. So this task then is going to be about VAT rules on record keeping, filing, payment, repayment, including non-compliance implications. And we've got parts A to D to complete. So first of all, we're told that you are working as a trainee in an accountancy practice. ALP Textiles Limited, a client, started to trade on the 1st of August and registered for VAT on that date. ALP Textiles Limited has not registered for any special schemes, and the first VAT return is for the period to the 31st of October 2023. So for part A, we need to select the due date for the VAT return for the period to the 31st of October 2023. So let's bring up some reference material first of all. So we're going to look at reference material 14, and this is going to help us answer this question. So it says that the deadline for submitting the VAT return is 1 month and 7 days after the end of the VAT period. So the end of our period is the 31st of October 2023. So 1 month is going to be the end of November, and then 7 days goes into December. So our answer will be the 7th of December 2023. The directors of ALP Textiles Limited understand that certain business records should be retained according to HMRC rules. So we have to identify now which one of the following business records does not need to be retained by ALP Textiles Limited for VAT purposes. So remember, we're looking at what doesn't need to be retained for VAT purposes. So we've got correspondence from the bank about a personal loan for a director, details of sales orders from customers, documents relating to the purchase of goods, and the bank statements of a business. Well, the bank statements we are going to need for VAT purposes, because this will show what has been paid or received from HMRC. Documents related to the purchase of goods. Well, this is going to be all about our input tax. So this is going to have the tax that we're claiming back from HMRC. Sales orders. This is about our output tax. So we're going to have to keep them. So the one that we don't need to keep is the correspondence from the bank about a personal loan for a director. That has no implication on VAT. The next part then is identify to which year ALP Textiles Limited must keep the business records for the VAT period ending 31st of October 2023. So reference material 5 can help us with this. So the retention period is 6 years. We are in 2023, so 6 years onwards will be 2029. Then we need to identify the consequence for ALP Textiles Limited if VAT records are not kept for the required length of time. So if we go back and look at reference material 5 again, we can see that a penalty for failure to keep these records is £500. So looking at our options, a notice of assessment would be issued, a penalty may be issued, the VAT registration would be withdrawn. The correct answer is the penalty may be issued. The directors of Alp Textiles Limited decide to submit the VAT return for the period to the 31st of October 2023 themselves to save some money. The return is submitted late and shows that a VAT refund is due. So it's been submitted late and we've got a refund. So we need to identify whether the following statements are true or false. Alp Textiles Limited will receive 4 late submission penalty points. So this is false, as they will only get 1. Alp Textiles Limited will not receive any late submission penalty points because there is no VAT due. Whether there's VAT due or not, the submission is still late and HMRC will still consider it late and act accordingly. So regardless of the fact that HMRC actually owe the business, there will still be a consequence of the VAT return being submitted late. So that answer is false as well. The last one then, Alp Textiles Limited will not receive any late submission penalty points because this is their first VAT return. So this one is true because there are no penalty points for their first VAT return. Moving on to the final part then. Another client is Vexty Limited, for whom you prepare and submit quarterly VAT returns. Due to change in bank accounts, Vexty Limited have not made payments to HMRC for the last 2 VAT quarters as the direct debit had been cancelled. Today's date is the 22nd of December 2023. So we need to select the first and second late payment penalties that will apply to Vexty Limited for each of the following VAT quarters, where the returns have been submitted on time, but the payments have not been made to date. All penalties have been calculated to the nearest pound. So what we need to do for this one is we need to have a look at part of reference material 17. So for reference material 17, it tells us what the penalties are for the late payments. So remember, the returns have been submitted on time, so we're only dealing with the late payment penalties. Looking at the information that we're given, we can see that June's one is 137 days overdue, and September's one is 45 days overdue. So we're going to be looking at dealing with the 31 or more days. So we're going to be looking at 2% on the VAT outstanding at day 15. And this is important for this one, 2% on the VAT outstanding at day 30. So we are first of all going to be using our VAT due amounts, so our 5,100 and our 2,700, to calculate our penalties. So for the first late payment penalty, we can start doing some calculations. So 5,100, we need to take 2% because all of that is outstanding at day 15. And that equals 102. But we can't stop there because we also need to do 2% on the VAT that's outstanding at day 30. Now, no payments have been made, so still the full amount is going to be outstanding. So we're going to, again, do this calculation again, so it effectively doubles. So we're going to have another £102, which gives us £204. So our first late penalty payment is £204. For the 30th of September on the first late penalty, we're going to do the exact same thing, except we're going to be using the VAT due on that date. So 2,700 multiply by that by 2%, which gives us 54. So again, because we're 45 days overdue, we've got the first 2% and another 2%. So we need to add those two together and we will get 108 as our first late payment penalty. Now, for the second payment penalty, we've got a slightly different calculation to do. We will have a daily rate based on 4% per annum charged every day from day 31 until paid in full. So just make a note of that. So it's 4% per annum on a daily rate. From day 31. So that's what our reference material tells us. So now we can do some calculations. So for the second late penalty payment for the VAT quarter end 30th of June, we're going to take our 5,100 and we'll multiply it by 4%. But remember, that's our annual amount. We're going to divide it by 365 days to get a daily amount. And then we need to multiply it by the difference between our overdue days, which is 137, and where they charge the interest from, which is day 31. So we are then going to multiply that by the difference between 137 and 31, which gives us 59.24, and we're doing it to the nearest pound. So our answer will be 60 from the drop down. For the September one, we're going to go through that same process again. We're going to divide it by 365. And this time, we're going to multiply it by the difference between the 45 days outstanding and day 31, which gives us 4.14. And out the drop down, you will then select £4. And that's the end of the task.